Hello everyone, Ali is here from Safi Financial Network. Today is February 21st, 2022. Happy Family Day for Canadian folks and happy President Day for American fellows. And we are having a very volatile this week. We just started future market yesterday. It was half day for future market. But anyway, lots of geopolitical tensions picking up. Russia kind of like invading two states of the eastern of the Ukraine, which is Donetsk and Luhansk, and also there is another fear for the market for monetary policy, which lots of Federal Reserve chairmen talking about tightening and talking about the interest rate hawkish monetary policy for the next few months, and this could be a potential setup for the bear market. But are we into the bear market? I just want to tell you something that is very interesting in this video. Please follow me by end of this video. For the videos, usually I'm showing you the charts and technical analysis, and then some different aspects that gives us instruments, and we just put them in our arsenal to use it to help us to understand charts. But I'm gonna give you more before going to the charts, and let's start for the other aspects of the chart, right? Okay, first to start with this one. This one is yield curve, and this is pretty interesting just because this is US Treasury 10-year US Treasury bond minus 2 years US Treasury bond, and this gives us yield curve. When we have inverted yield curve, we are into recession or bear market, or that is going to be a cause or reason for bear market, right? So you can see here we have beginning of the 90s bear market, 2000 year of 2000 bear market, 2007 bear market. So every single time this yield curve goes below zero, this gives us a bear market or signal for the potential bear market coming in what? In next 8 to 18 months. That's right. So when we have a negative reading in yield curve or inverted yield curve, it doesn't mean that we are dumping to the bear market or falling to the bear market right away. No, it gives us 8 months to almost 18 months. Then there is going to be a potential bear market. Okay, for this, I'm gonna just compare this chart with S&P 500, all right? So let's see how S&P 500 plays out with this chart. And just wanna give you, just zoom in a little bit. Oh, okay, so this one is get better. So you see here is year 2000, and this one goes down. You see when we have negative reading is January 2000. And as you see above the cursor, look at here guys, as you see January 2000, still we are into bull market. And when stocks or indexes roll over or S&P rollovers, here's the time. So August 2000, so it gives us 8 months to roll over, right? And here is another example. When we are getting into inverted yield curve, this is a potential setup for the bear market. But look what happened to the S&P 500. This is February 2006. And after February 2006, market, which is orange line, or S&P, goes higher and higher and higher and higher. And we are still into bear inverted yield curve. And then in December or October 2007, market rolls over. So it gives us almost 18 months to roll over or getting into the bear market. Here is another scenario which is very recent. September 2000, October, September 2019. I was into the market, and I was like, it was pretty interesting for me just because everyone's talking about inverted yield curve and everyone's talking about a potential bear market or recession is coming. And that talk was really hard and really hot on that time. So remember August 19, September 19, 2019? And what happened almost 8 months after that? February 2020. No one expected that COVID crash is coming, but it came. It came and it was very hard. And as you see, market slammed down all the way, like it just lost more than 35% in S&P 500, and after that going back up. So right now people are talking, hey, we are getting close to the bear market, but look at that, here is the slope is going down and we are going to the recession. Yes, probably, even if this one hits here, it doesn't mean that we are into bear market. Just because this one is sloping down, look at that here, sloping down, but when it gets there, we are still into bull market. Even when we are getting there, we are not into the bear market yet. It gives us time, almost 8 months, probably 6 months this time, I don't know. But it gives us time to go to the bear market. It's not gonna go right away to the bear market. So yes, this is a sloping down. This is all, of course, this is going to be alarming signal, or it's going to be very, very huge alert for us. But first of all, we are not there yet. Second, if we get there, we are not going to the bear market right away. It gives us time, 8 to 18 months historically. 8 to 18 months, then we are getting to the bear market. So don't look at the chart and inverted yield curve because it is not inverted yet. Yes, it's getting close to the inverted, but it's not inverted yet. But even if it gets inverted, it doesn't mean that we are going to the bear market right away, right? So this is the first chart that I want to talk. And the second chart is this one. This is pretty interesting. The chart below is put-call ratio. It means that when everyone's getting bearish or they want to hedge their portfolio, they are kind of like a put, buying put or short the market, right? So when they are shorting the market, they are just buying put option against S&P 500, okay? So when this put slash call, it means like the put is going higher and call, which people are getting bearish, is going, the number of people are getting bearish is higher and the number of people are getting bullish is getting lower. So when this coefficient or when this chart is going higher and higher, it means like the number of bearishness or the number of people who are bearish is getting higher and higher. And usually when the number of bearish people is getting higher, we are close or we are at the bottom of the correction or recession even. So look at that. Here is the PCC or put-call ratio compared to S&P 500. This is S&P 500 and this is put-call ratio. Here is the historical view. Look at that. Here we are at the very severe number of put options. Like everyone's getting bearish. Everyone. Look at that. How many people are getting bearish here? So this is like above the line that I'm just drawing, just because I put like some levels for myself to understand that where are we at. But here is extremely bearish. People are getting extremely bearish. And look at that, where are we? So people are getting bearish at the bottom. Here's another example, 2018. When everyone's getting bearish, we are at the bottom. And look at that. This is nice V-shaped recovery. Here is the COVID crash. People are getting bearish here. That was very sharp and fast, right? So people are getting crazy bearish here. And look at that. And where are we now? We are here. We are here. So people are getting super bearish. People are getting super bearish here. And I know we have time to get here, but even if we are not there, like COVID crash, we were there and just forming the bottom and skyrocketing to the upside. We are above COVID crash, so the number of people are getting bearish even now is more than COVID crash. And the sentiment is super bearish. When we are talking about the sentiment, let me show you another chart which is very interesting. And here is AII bull bear sentiment, and this is very nice one, just because we have like a more than 30 years historical data, and we can rely on this. And look at that. Here is the week ending last week, and this sentiment just asks people, what is your perspective for next 6 months? So for the next 6 months, people are gonna talking about, are we gonna be bullish or bearish or neutral? And look at the bullish sentiment, just less than 20% bullish sentiment, and we haven't seen this like for a while. Like everyone's piling money into put option, and everyone just I don't know, if they are not margin call, they are just put their money into like a cash, or just putting on the side, just waiting for correction to be end. And this is the bearish sentiment of the market. And we are very close, just because last week or like 3 weeks ago, we had a very negative bearishness. Like 52%, almost 53% of the people were bearish. And right now we are close enough to 43% bearish, 37%. And just add these two numbers, we are getting to 80% neutral or bearish. Just 20%, less than 20% is bullish. So this gives me a signal that when people are all at the one side, Ali, you should better go to the other side. When everyone is getting to the one side of the boat, go to the other side of the boat and wear safety jacket. And this is the time that we should be slightly bullish. If you are not, I'm just giving my idea. I'm fully invested, and I'm just buying and buying, just because this is not the time to sell as my prediction. I'm not gonna tell you what to do. I'm just telling you what I'm doing, because I don't take any responsibility for any of trades of you're doing or any investment. Just I'm giving you my idea. I'm fully invested just because everyone is getting bearish. Look at that. This sentiment is crazy, right? So I show you exactly in the chart where are we at. Okay, so let's go to S&P 500. Okay, so based on the geopolitical issue, we had a very sharp sell-off just yesterday, just because market was half day, and it was just future market. Look at that shooting a star down there. And today in Asia market, when market opened, it was open like gap lower. It sounds like of a capitulation, right? So when it gap lower, it's just going higher. And look at if you look at the hourly chart, so hourly chart, you see here's the gap, and market is open higher, right? So it goes higher. I'm not sure if you're getting there and then coming back down, but this gives me that people are not panicking, and probably they are kind of getting prepared, or all the bad news has been digested. Like everything has been digested into the market sentiment. Of course, we can just delete this one. And I'm not sure if you're holding the pivot low here for the which was for January 2020. If we take this one out, I'm going to the monthly chart and give you exactly what is my level for the next downside, if we get there. I'm not sure, but monthly chart is very it is not good. It is ugly, to be honest. It is ugly, just because we are getting to very interesting support, which is 47.82, which is Fibonacci level as I have, and this is a very nice support. If we take this one out, and if we take 41.90, which is important, we are going to 41.25 on the S&P 500, and this is very solid support, to be honest. 41.25 is very solid support here. And going to the weekly chart, if you're going to the weekly chart, and as you see, the momentum is absolutely in the bearish sentiment. And last time we get there, it was in COVID crash. And right now, I'm pretty happy we are getting there, just because probably the momentum wise, we are getting 1 or 2 weeks to the bottom. And if this one goes back up, and if we do not take this low, probably we are going to see a very, very nice W pattern. Exactly the same thing like here. So we have seen a bearishness here going down there, and then market goes up and didn't hit the high, and then coming back down, didn't take this low, and then off the rally. We were off the rally, right? So again, that's going to be another potential scenario if you're not taking this one out. Or there's going to be another scenario that there are lots of W pattern that we're forming is going to be like this. So when this one is going down, going up, and then everyone just put their stop loss here, but market goes down to remove all the stop losses and going off the rally. So this is very, very interesting. If we take the stop losses and then going off the rally, and I'm looking for a very, very nice divergence here in the RSI. If we have seen something like this, that's going to be buying opportunity. But right now RSI is going down, so this low is there, so we have no divergence. So there is no divergence, there is no buying opportunity for now, because that's going to be a lower low and another lower low in RSI, so there is no divergence. But momentum wise, which is a stochastic momentum index, it gives us opportunity to buy, just because for the first time after COVID crash, we hit the fast line, it goes to the oversold area, right? So that is very important. But as I said, in monthly chart, 41.25 is going to be a support level. If you're going there, I'm kind of like looking for a reversal if we take out this low. But if we don't take out this low, then if we hold here, then probably the reversal is happening this week, or probably end of this week or next week early. All right. So let's go to the daily chart for the S&P 500. So here is the daily chart. Oops. Just save this one there. All right. So as again, momentum wise, we are going down right there to the oversold condition. Exactly the same thing happened for the last week of January, and I'm just waiting for a reversal forming there. Probably there are lots of supports here, as you see, there are lots of shadows here. So this is nice. Exactly. Look at that. So here is the major pivot. We go there. Take all the stop losses here, just because people put the stop losses there, and then look at the rally. So probably we are going to see another one. This one going down there to 41.25, which is fantastic level, right? So probably we're going to this box and then going back up. If we're going there with the one shadow and then going back up, or two shadows, and we close above this, especially on the weekly chart, then we can say a 5-wave correction is done. So this is going to be wave 1, wave 2, wave 3, wave 4, and then wave 5 is going to be completed, and this correction would be ended probably. So again, we can't say exactly if market is going back up to the bullish momentum or not, but based on the news, based on the bad news, to be honest, for the market, this amount of bearishness is nothing for me. Just because market seems like digest the news, and they're saying, okay, just that they're coming with sanctions. Seems like NATO, UK, European countries, they're not gonna start war with Russia, and probably they ended up to the sanction, and sanction doesn't like do anything, to be honest. The sanctions in the look at the history of the sanctions, it doesn't do anything for those people of those countries. Basically just doing nothing. It's just a political show. That's what I'm saying. Okay, let's go to the NASDAQ, which is the weakest index among the other ones. That's what I'm saying. So if we just take out this Fibonacci, so this level doesn't hold, so we can just delete this one. And NASDAQ is giving us a very, very bad crossover here. So you can see there are lots of crossovers in the daily chart. And here's the 50 to 150, which is the first alarming signal for me. and this one is sharply getting close to 200 moving average. So if this one cross over to this one, everyone is saying we are getting into the bear market, and that's going to be first time after COVID crash. But look at that, when COVID crash happened, when we had like a bearish crossover, where were we? We were there, we were up there. So again, if price is getting above the moving averages, and even if crossover happen, it doesn't mean that we are into bear market, right? So this is for moving averages. But here is the channel, or here's the wedge or ending diagonal. So you can see here's the 1, here's the 2, here's the 3, here's the 4, and probably here's the 5, right? So if this doji star is going to be adjusted nominal low for just satisfy the low, and it's going to take out all the stop losses and going back up, so that would be great idea, just because look at that. Here's the wide range bar, and previous that here's the wide range bar, and probably that's going to be bottom. I'm not sure. Probably I'm saying probably, just because there's going to be a potential downside if again something crazy happen. Who knows in this world? So something crazy happen, price just going down to this level. But this is very, very major pivot. That's what I'm saying, at least for the NASDAQ right now. Okay. So I'm looking for buy NASDAQ again. If we see any reversal happen, I'm just waiting for the confirmation, because we lost a couple of trades in NASDAQ, and we had like a good winning trades as well in gold and NASDAQ as well, and oil. But for the NASDAQ, I'm just looking for a confirmation. Probably after confirmation, we can just trigger buy. All right. So here's the NASDAQ, and let's go to the US 30, which is Dow Jones. Okay, so Dow Jones, we are seeing. Okay, let's start with weekly, huh? All right. So in Dow Jones, we are seeing a very, very nice bullish setup, just because this one is getting to the oversold condition. So this setup needs to be prepared. It is very, very immature. It is not ready yet. But look at that here. So here is the bearish momentum, a bullish momentum again. So this is a reversal bullish momentum. And if you're getting down there, so probably we can see another setup. And the good thing for Dow Jones is we are not taking out this one, and we are not taking down this one yet. So for the other indexes, we are taking lots of critical pivots. But right now for the Dow Jones, we are still above the pivots. And look at this trend line, by the way. So here's the major trend line, and still we can go there to take all the stop losses below 33,000. But above this, that's going to be very important, just because above this trend line, it's going to be buying opportunity, right? So for the weekly chart for the Dow Jones, I don't see any major issue. Yes, we are losing the momentum. We are below these two key moving averages, which is a 50 and 20 on the weekly chart, but still we are above these pivots, right? So for the Dow Jones, just because there are lots of energy stocks, there are lots of financial stocks, market holds itself well, right? Okay, let's go to daily chart. And daily chart, like the other indexes, we just go to the 78% Fibonacci, and even we are not reaching to 88% Fibonacci, which is better than S&P and NASDAQ, obviously, just because NASDAQ is there, but Dow Jones is here. So if we are taking out this level, so we should look at a more downside, like here, which is 32,700. That's going to be 32,000. That's going to be a level right there. But for now, still, a market is trying to fight itself to hold itself above this pivot low here, just because there are lots of institutions buying back there. And also, this is very, very low volume, just because today was just future. It was not open. The real market was not open. So this candle can easily fade out if market opens tomorrow with a bullish sentiment, right? So again, I'm not hoping. I'm just seeing what is going on with chart. So here is the very sharp sell-off. For sure we have lots of upper shadows here. There are lots of sellers there, and but here we are getting to this major pivot. So if we take out this major pivot, we are going down there. If we hold this major pivot and then we are getting back up, probably we can see Dow Jones is going higher sooner than the other indexes. Okay. Russell 2000, which is the last one, and Russell is interesting just because it holds itself very well, right? So after a sharp sell-off, just Russell initiate a sell-off earlier than the other indexes. But look at that, when we are getting to this last week of the January, we are even now above like 78% and just testing 69% Fibonacci, and this is pretty nice just because Russell holds itself very well. So if it holds itself very well here, and if we are seeing a reversal back up, then we can see Russell hitting this 2100, which is a major resistance there. If we take out this 21 resistance, we can say we are getting back to the bullish momentum very cautiously. But right now we are seeing Russell is better than the other indexes for sure, and we give it benefit of doubt. All right. Okay guys, here is the weekly wrap for this week, and sorry for the late update, just because I had short trip to the back country for the long weekend. Coming back yesterday, was tired today, and now I'm giving you this update. Please give us subscription. If you like this video, please give us thumbs up if you like this video, and come to our channel, Safi Financial Network, in our Telegram group. We are giving you lots of insights, we are giving you lots of updates during the day, during the week, and there are lots of information there for free. All right, have a fantastic week guys. Okay, stay healthy and good. See you on the chart. Bye bye.